Welcome to this, the third of Burton Sweets videos on the 3rd of March 2021 budget. I'm Nigel Harris, a partner in the Shepton Mallet office, and I'm joined by Michelle Chaplin, one of our personal tax managers, who's going to take you through the personal tax changes in the budget as they apply to the 21 to 22 tax year. Just a reminder, follow the links below if you'd like to see the other two videos in this series, and also there's a link to the budget commentary on our website. If you click on the subscribe button, you'll be able to keep an eye on any further videos we make on YouTube. And if you click on the bell, you'll get a reminder every time new content is uploaded. So without any further ado, I'll hand over to Michelle, all yours.
Thank you, Nigel, and good afternoon, everybody. And thank you for watching this budget update. This afternoon, I'm going to be talking to you about the announcement made in the budget regarding to personal taxes and also capital gains taxes. Now, the Chancellor had already announced the allowances which would apply from April 2021, but he's also confirmed in his budget that all allowances and threshold would be frozen from the 6th of April 2021 until the 6th of April 2026. The good news is that the starting rate at 0% of saving allowance for people on low income will continue, so they can earn up to £5,000 of interest and not pay any tax at all. The national insurance contribution limits are also following the tax thresholds. Starting with the income tax personal allowances, you will see that the current personal allowance is being increased by £70 starting from the 6th of April 2021. Other allowances such as married couples allowance and the blind person allowance are also being increased slightly. However, all of these will be frozen now until the 5th of April 2026. The income tax band and rates have gone up a little bit with regard to the basic rate band from £12,570 to up to £50,270. The other high rate band and additional rate band do not change, nor do change the tax rates applicable to each band. You may consider before the end of the tax year reviewing your entitlement to receiving child benefit. In view of the pandemic, if your income has gone down, it may be worth trying to claim again if you're not a high rate taxpayer in this tax year. From next year, because of the tax band being increased to £50,270, some basic rate taxpayer will also have to pay back some of the child benefit they receive. Before the end of the tax year, you may also consider reviewing your entitlement to claiming the marriage allowance. This is where one spouse is not a taxpayer and the other one is not a high rate taxpayer, and the non-taxpayer can transfer 10% of their personal allowance to their spouse. In this current tax year, this could create a £250 refund. Let's look at personal pension. Now, the lifetime allowance is the maximum amount of pension contribution you can pay in your lifetime until you retire. This is being increased slightly to £1,073,100. And again, this is being frozen until the 6th of April 2026. The pension annual allowance remained at £40,000, or if you don't earn that much, the net relevant earnings. If you don't have any taxable income or earned income, you may be entitled to pay into a pension up to £2,880 net of basic rate tax relief, and the government will put the difference up to £3,600. This is quite handy if your partner or spouse doesn't work. You can make pension contribution on their behalf. And the same with young children. You can also start a pension pot for the children to teach them how to contribute towards their own retirement in the future. There's been a change since April 2020. The maximum amount that you can pay into a pension if your adjusted earning exceeds £240,000 is £4,000. If you haven't used up the whole of your personal allowance in the last 3 years, you may be able to bring some forward and use them up if your income has gone up this year, and you can do that for the previous 3 years. Individual savings account, these are quite useful. If you haven't used this year's allowance, this is 20,000. Any income or gains of money invested in an ISA is completely tax-free. This is being frozen for next year. Now we don't know what's going to happen in the following tax years. Chairmen can also have ISAs, they're called junior ISAs. There's a saving limit of up to £9,000 per annum, which is also being frozen for 2021-22. Now, a junior ISA can only be set up by a parent, but once it's set up, anyone can pay money into it. So it's quite useful for grandparents if they want to contribute to their grandchildren's future pot. This is quite useful. They can't touch it until they're 18. At that time, they may need the money to go maybe on a round the world tour, or pay for their university fees, or even learn to drive or buy a car. A lot of people do not know that once someone has passed away, an ISA account will continue to be tax-free with regard to the income and gains until 3 years after death, or if they have been passed on to someone else. Let's talk about capital taxing and start with capital gains tax. Now, the annual exemption, which is the amount of gain you can receive without paying any capital gains tax, is also being frozen until the 5th of April 2026. Individual and personal representative have an annual exemption of £12,300. Trustees, on the other hand, can only claim half, and this is adjusted and restrictive if more than one trust has been created by the same set law. Capital gains tax also remain unchanged despite rumours that these might be aligned with income tax. These are remaining exactly as they were before. Now, one thing you need to also remember is since April 2020, when you sell a residence property, a residential property, you need to report the gain within 30 days of the completion of the sale, and also pay any capital gains tax due to HMRC, and this needs to be done online. So if you need any help with this, Burton Sweets is really well set up to assist you with registering with HMRC and doing the relevant computation of the gain and the amount of tax that you might need to pay. Inheritance tax threshold and allowances, again, they do not change. They remain the same. Now, the current nil rate band, which is the amount you can pass on to your family or anyone for that matter, without having any need to pay any inheritance tax, remain at £325,000 per person. And this has remained the same since April 2009. Now, in view of the increase in property prices, a lot more people are now paying IHT than they used to. To do that, several years ago, the Revenue and the government introduced a new residence near rate band, which allow parents to pass on to children, grandchildren, and so forth, a portion of their estate, which is if they had a property that they own and lived in while they were alive at some point. These allow a couple to pass on up to £1 million to their family without paying any inheritance tax. Now, in your lifetime, you can make some gifts, small gifts to children and grandchildren or friends, and these limits do not change, they remain the same. And they haven't increased for quite some time either. Now, the main gift is £3,000, and if you don't use it in one tax year, you can carry it forward one tax year. But you do need to use the current one before you can use the previous year one. But as a couple, if you haven't used last year, you could give up to £6,000 to your children, and that would fall out of your inheritance tax and not pay any tax in the future. Other reliefs for business, property relief, agricultural property reliefs, these haven't changed either, despite rumours. They remain the same and they're still available which can sometimes help to reduce the tax payable on death to nil. The IHT rates haven't changed. They're still 20% for gifts given in lifetime, and on death at 40%. Now, it's really important that you should have a will in place so your family knows how you want to distribute your estate after you pass away. But you also need to review it regularly in case there are changes to your family. And this has been shown to be even more important during this past 12 months of the pandemic. But it's not sufficient to have provision for when you pass away. You also need to make provision for when you're alive in case you become incapacitated and unable to look after your financial affairs or even your health. And this is why you should consider having lasting power of attorneys. And these can be easily put in place, and Burton Sweets can also assist you with those. Now, if you have a trust or if you're a trustee, you need to also remember that since April 2021, trustees must maintain a trust. That means claiming the trust online through the trust registered service with HMRC. And every year before the tax return is submitted, you need to confirm to HMRC there's been no changes to the trust, or and make notification online to HMRC of any changes, which could be a new trustee, for example. And if you are trustees of more than one trust, you need to set up a separate gateway account for each one. Again, Burton Sweets is very well placed to do so. I do those on a regular basis for our clients, and while it's can be a little bit temperamental with regard to how the service work, and it's not always successful on first attempt, we have been able to register and maintain most of the trust that our clients have asked us to deal with for them. Stamp duty land tax. The Chancellor has announced that the provision that was made last summer to enable people to apply to acquire a first property or replace an existing residence, if the cost of the property was less than £500,000, they would not pay any stamp duty land tax. This has been extended to the 30th of June 2021, and from July this will be reduced to £250,000, and then subsequently from the 1st of October this will go back to the original figure, which is the first £125,000 of the property will be charged at 0%. This is quite useful at the moment to encourage people to acquire a property with having to pay so much more in stamp duty land tax. Now, this only applies to individuals, a company or a business or a trust cannot benefit from the reduction in the rates, and it's only applied to residential property where you're going to move into it to occupy as your private residence. So in summary, there was not many announcements regard to personal taxes and capital taxes by the Chancellor, but it's really important before the 5th of April 2021 that you make use of all possible allowances, review your entitlement, maybe to transfer the married allowance to your spouse or civil partner, or maybe to claim your child benefit again if your income has gone down. Review your pension. Can you top up and get additional relief and increase your pension pot for the future? Or are you sure that you haven't paid too much and you may need someone to review it to make sure, again, you don't fall foul of the legislation? If you have any question whatsoever, you can contact me at the details below, and I work 4 days a week, Monday to Thursday, and I'll be delighted to help you in any way if you have any queries. Thank you very much for listening, and I'm looking forward to our next webinar. Thank you.
Thanks, Michelle.